All right, we are live for a Saturday edition of the Mike and Mario Show. Excited to connect with you guys, and of course, Mario, as always, it's good to connect with you, my friend. How you doing?
I'm doing well, and you, Mike?
I am not bad at all. Excited and looking forward to our chat. A lot of things taking place since we've last connected, and so it's always good to recap on what happened as well as try to predict and forecast what could be coming. And so you're up in the UK, I'm in the US, so we're in similar situations here, just separated by a body of water. But it is what it is. But so I entitled this live stream. So for those tuning in, hit the thumbs up button, show your support for the channel. And so I titled this "Crypto Regulation: Stifling Innovation or Disrupting Competition." Which one do you think it is? And so right now they're beginning to do some voting on which amendment they're going to run with, whether it's pro crypto or anti crypto in some sense. But based upon where you're seated or where you see it, what's your thoughts on this, Mario?
I personally think the most important point is that it's trying to defeat the competition to the state fiat currency, and the other one though is taxation. They want to make sure they get access to people's accounts so they can tax them for capital gains on cryptocurrencies. So I think they're trying to push the exchanges to police people's accounts. And I think that's wrong because, yes, capital gains taxes have to be paid, and they're different in the US than the UK. But it should be up to the individual to do his tax return or her tax return and declare that. You shouldn't have brokers or cryptocurrency exchanges keep track of people's capital gains tax. It doesn't make any sense. But it's a sign that the state is getting more and more desperate for revenues, even though the Federal Reserve and the Bank of England are keeping interest rates really minimal. So the interest cost on the ballooning that is not that big. But these people, that's the thing. Politicians, they always want more and more from the people. But I would say that ultimately is they don't want people getting away from the Federal Reserve dollar or the fiat currency dollar and opting for private money.
Right.
Yeah.
No, I agree. And that's where, of course, it's the infrastructure bill is 1.2 trillion as of now. And as Biden has mentioned, it's just a down payment as to what's needed for the completion of the Green New Deal, which is a total of 50 trillion between now and 2030. So no matter what, there's going to be several packages coming up until that point, if the system is able to maintain itself long enough to execute that in dollar terms. But I think we're distracted by that, one or two words in there, I think is part of the 2,700 page bill that no one has read, that just basically categorizes, miners, node operators and coders or whatever as brokers. So that one word labeling everybody as a broker is what the crypto community appears to be, based upon Twitter and everything I'm following. They're up in ends about, because it's basically, as you just mentioned, they're trying to find out and see every type of transaction you have, and they're putting it on the exchanges and whoever else run those nodes. But then also they're trying to create a little rift between proof of work projects as well as proof of stake. And so proof of stake, of course, to me has always been more favorable because that's something you can do on your own without needing to have a miner in some location running all these rigs. So they're trying to create an inner turmoil conflict between the crypto community, while also just ultimately they're going to regulate it regardless. So it just matter how do you want it. But it's not going. It can't end the technology. It can just end the certain companies, I think, that are, central points of focus where you have a CEO board. They have an office in New York or something like that. Those are the ones that will be in trouble because they may have to leave the country and everything else. So,
it's tough because cryptocurrencies, like the thing that they don't like, the politicians, not only in the US but here, is that they're decentralized. So some cryptocurrencies don't even have a head office. It's just people coding from all over the world. So it's really hard for them. They don't understand that. I can't hear you.
My bad. I'm sorry. I keep hitting the wrong button. So sorry about that. But no, so here's the thing. Like, I think this it's very timely. And I remember ranting about this a while ago as to how people are always waiting on adoption from institutional funds. And so we've saw all types of big corporations start adding projects to their balance sheet and stuff like that, and preaching, getting out of the dollar, do this, run this, because of, Michael Saylor he's an advocate for, basically giving analogies as how the dollar is a melting ice cube in your hands. You don't want to be left holding a puddle of water.
I agree with him on that, but I don't agree with him on other things, but
yeah,
there you go.
But they can't, I still don't think this regulation stuff can stop the momentum of crypto, because it's still, as of now, priced in dollar terms. And as long as they're going to continue to weaponize the dollar, 1.2 here, 3 trillion by the end of this year, 5 trillion. So anywhere it goes, it's all going to be absorbed into the cryptos. And the biggest question will be, when will the metals actually get some of that love? Because right now, crypto market's doing mighty well.
Yeah, and you sent me something that someone tweeted out here, how if you want to share that, by Charlie Bilello, about the performance of commodities. And what stands out is like how gold and silver have actually gone down so much, and everything else is up like 40 to 90%.
Look at that, man.
I know there is manipulation in the precious metals, but if you look at oil, it hit $150 back in 07, 08.
Yeah. And
gold at the time was 1,000. So now if you look at it, oil is just below 70 and gold is at 1760. So there are cycles. They don't move all at the same time. I personally think precious metals are going to catch up. Especially with what you said to me, that they're going to do another 50 trillion in the next 9 years. I mean, how are they going to get those trillions? And the thing, infrastructure nowadays means not just roads and bridges. It means social spending, which is not infrastructure. It's more welfare. That will make the country more and more dependent on government. That will hurt the private sector. I'm not saying that some private companies haven't benefited from government, like the big banks, but I don't think government should be involved in any part of the economy. If you look, if you Google government spending by share of as percentage of GDP, you get a Wikipedia page where they show you the historical government spending as a share of GDP, and all the major Western countries, like in the beginning of the 1900s, we spent less than 10%. The government's tax spent less than 10% of of GDP, and now even the U.S. is almost up to 50%. France is like 60%. So I think the current administration, and all administrations, to be honest, because prior to this administration, Trump administration was running a budget deficit of 5% of GDP. That was before the health crisis. So I think the U.S., unfortunately, unless something changes drastically, is going to go like the French way. It's going to creep up and up government spending to one day will be 60% of GDP. And that's going to hurt the economy. The 50 trillion will be wasted. And that's why I keep stacking gold and silver. I think cryptocurrencies are more speculative. I have exposure to cryptos, but not as much as precious metals. I still believe. I still believe that the track record of thousands of years is very important.
I do agree. So here's a question out here from David in the chat. It says, since money is an illusion, shouldn't we talk about how we can replace it instead of preserving it?
Okay.
That's a loaded question right there.
Well,
replace it.
Do you want me to answer?
Feel free. Then I'll chime in as well. So
well, the way to look at money, in my opinion, is to go back and see what we had before money. We had barter. Barter is a way of it's direct exchange. So Mike has shoes that he makes, and I make golf clubs. Mike doesn't play golf, but I need shoes. How are we going to exchange that? Well, money facilitates exchange,
Yeah.
and it facilitates indirect exchange. And money through history, if you go back, has always been the most marketable commodity.
Hmm.
Uh, and it's been many things like wampum, it's been conchas, it's been salt, it's been cattle, it's been precious metals for
Yeah.
thousands of years.
Yeah.
And I don't know what you would replace money with. You
Right.
would have to go back to subsistent living.
Hmm.
Everyone would have to have his own farm and live off the land.
Right.
The problem with that is that we wouldn't be as specialized, and we wouldn't have had all the technology, all the industrial advancement that we've had in the
Yeah.
last 200 years. So
Yeah.
I don't know how we could function without money. And
Yeah.
money also, aside from facilitating indirect exchange, it's also a unit of account. It's also a store of wealth.
Hmm.
So
Right.
it's
And
part of civilization.
right. And
Without money, there's no civilization.
I agree, and I think, and that's where I'm trying to read the question, because I'm trying to see, is he hinting towards like the technology side of things, where cryptocurrency is now more useful because of all the benefits they try to sell us with, or what? Because I'm thinking about, you can't replace money, because we always need some type of intermediary between me and you to exchange of goods and services, as well as a storage of our economic energy. And so no matter what, we're going to all use something that we can commonly agree upon, that you'll be willing to sell, and I'll be willing to work for, at least to live our lives with. So I'm not quite sure how can we replace it.
I think what he means by illusion is that, unfortunately, for the last 100 years or so, money has become an illusion, because it used to be, if you had a banknote, or what we call today cash, which isn't really cash, you could go, that was just a receipt for money, which was something physical, like a silver coin.
Yeah.
But we've been so detached from real money for over 100 years that it is an illusion.
Yeah.
But real money isn't an illusion, in my opinion.
Right. I do agree. And speaking of which, I always like to, because I keep these little visual aids here handy for conversations like this, just in regards to what I consider America's money, how it's changed to where gold and silver, and this of course goes back 1850s, how it's been a slow progression over the last 100+ years, to the point where now they're going to rebrand what we call currency or money to central bank digital currencies, even though we're in a predominantly electronic currency world anyway. So they've just taken away what was tangible, real and physical, turned into paper contracts back and forth. Now it's going to solely a digital ledger type stuff. So are you surprised
further? No, they're getting further and further away from reality or real money.
Right.
And it's going to become super chat there. Mike.
Programmable. It's programmable. It's going to be programmable now, and literally dictated by the issuers of it solely. Chris, appreciate your love and support, man. It says, do you think digital dollar could be seen as unconstitutional and face Supreme Court opposition potentially? Thanks. I got my thoughts on that. But firsthand, I would say no, because after all these events that's occurring now, the moratorium's coming to an end, unemployment coming to an end, as well as all the other stuff that's going to force people to be in very dire straits. It sets the perfect storm for Congress to then respond before the end of this year with some type of congressional approval, allowing the Federal Reserve to amend their their Federal Act reserve, as well as the legal tender status of stuff, to introduce that. I think so. I don't think it's going to get much pushback, because there's going to be a lot of desperate people out here that will need help.
They'll find a way. And I mean, Chris, we could also argue that the Federal Reserve note that we have now is unconstitutional as well, because I think the Constitution says that only coin is money. Paper isn't money. Yeah,
very true, man. And so let me see here. So feel free to throw some comments, some questions or whatnot. We'll definitely touch on them, because we got a couple articles here. And so it looks like on your site, give us the rundown of what's happening in the UK, man. Like, I came across an article talking about continuous spending or something like that. But What's the current tempo? What's the environment like? I know you guys have some protests. Is that stuff still going on out in the streets in the UK?
I think there will be like a demonstration, they call it, next Saturday, so the 14th, in London.
Yeah.
It's not making much headway, I don't think, but there's a lot of talk. I think the government here and in other countries, or like in the US, they're desperate to get people to get this medical procedure.
Yeah.
They're really pushing it. And even people who have had 2 of these procedures, the double procedure, I noticed that they were talking earlier this week about boosters, so that you have every 6 months, you have to have this procedure. And I was reading the Daily Telegraph comment section, and people weren't happy about that. Even people who have had the double procedure are saying, that's enough. I don't want it anymore. But they're trying to coerce people, especially young people, by saying that if you don't do it, take this procedure, you're not going to be able to travel anywhere anymore.
Yeah.
And they're trying to push private companies to make it so that you have to have it. I heard today that CNN they've sacked 3 of their reporters or workers. I don't know if it was CNN in the US, because they hadn't gotten their procedures. So you can't work at CNN anymore if you don't have that.
Yeah.
And I told you before we went on air that now they're trying to say that the herd immunity is falling apart. So I think, like you think, I think they're setting us up for another lockdown.
Yeah,
I saw that article. Yeah, I saw that article that you sent me about the credit market. It seems like the credit market is worried. There's not enough certainty for it to function well, and there's a lot of troubled debt securities is growing again.
Right.
And it's the first time in a few months.
And so when I saw this headline here, I remember, Bill Holter, when I first got into this whole monetary awareness, it was from Bill Holter years ago, talking about the credit market. It's all about the debt market. It's all about the credit market. Pay attention to what's happening to the credit market. That controls and tells you everything. So when I saw this, I'm like, damn, when this becomes a headline story on a major news syndicate, it's like, okay, well, that's definitely signs of, some issues behind the scenes. And of course, the reverse repo nightmare of stuff that's happening and all that stuff they're creating off this. These monetary tools are continuing to expand, which is their way of trying to save the system as best they can. And that's why I think there's a time limit on this push for participation and all this stuff, because they have some very sinister things they're going to try to pull off with this stuff, man. But we got a question for you. Go ahead.
The Bank of England as well had its meeting this past week. They said that CPI, or inflation, is going to go up to 4%, but they're only thinking of raising rates maybe in 2023. I think they'll let it run really hot. They're not thinking of raising rates at all.
Yeah.
I made a video this morning, and it was a little bit controversial. Some might consider it clickbait, but my title was Federal Reserve emergency meeting to raise rates as the economy booms and stock market booms. Because we had great jobs numbers yesterday, and the stock market is at all-time highs, and yet how come the Fed isn't raising rates? So my point was that when there are crashes like in 2008 and last year, the Fed will do anything. They'll do an emergency meeting, cut rates, do QE. And now the economy is doing so great. How come they are not meeting, this weekend and say, well, we're going to raise rates to 5% because CPI is running at 6.6% annualized in the last 6 months. But they're not going to do that. And can you imagine if the economy and these numbers were coming weak and the stock market was correcting?
Yeah.
They would literally, if they're not raising rates now, they never will. And even if they do, it's going to be like a token rise from 0.25 to 0.375, something like that.
one of my biggest concerns is they can't raise because they could no longer, the government couldn't support the debt load, and everything has always been trending downwards. Now it's always that question of, will we actually see negative nominal numbers, interest rate, Fed funds rate, all the other interest rate, bonds rate, everything negative, because I don't think it's ever happened before for a reserve currency. But then we got Jackson Hole coming up next week, or next month, or later this month rather. So here's an article I read yesterday. It says how the Fed's digital currency could displace crypto, and it's like a opinion piece. But the young lady was talking about how in this upcoming meeting they're going to be talking about tapering, tapering and the discussion of raising rates. Yeah. They're just talking that. But then
she's a central bank lackey, that Jillian Tett.
Yeah. So, but she's laying a framework for the CBDC. And that's why I was thinking about how the primary discussion is going to be how, what, when, where, because she's even talking about the technology they're developing now is brand new. It's all that stuff like that. And so I think there will be no official announcements from the Federal Reserve, because they're going to come out with these 2 white papers for the public perception and how it's going to work. And so I'm anticipating the emergency type of meeting in need of what they're going to say is a CBDC to get directly to the people's hands. And then we have another event that I wanted to talk about that's taking place as well. I keep losing my train of thought, but dang, what is it? So I'm trying to put together all the dominoes as they're falling, because they're going to fall come officially October-ish, when everything will hit the fan. And then at that moment, I do anticipate some type of emergency meeting before the end of this year. We got 4 months left, and the way things are heading, it's going to be hard. At the Fed, correct. At the Fed, correct.
It won't be to raise rates, though.
It won't be to raise rates. It's going to be It's going to be an emergency meeting where the Fed is going to call upon Congress to make some decisions to give us authorization, because the markets need it, people need it, the people are hurting. We got to get directly, because there's another act that Omar, the Democratic Republican or Democratic senator from Minnesota, is called the Support Act, which is the announcement of direct stimulus, direct support to the people during this entire process. UBI is basically what she said it is.
Yeah.
So you got UBI. That act is going to be voted on at some point in the future when stuff get really dire. And then you got the Federal Reserve needing to use their project to get it directed to the people. So UBI and the CBDC will work hand in hand real soon, I think. So it's unavoidable.
I saw you sent me an article about the people who are losing it's called Pandemic Unemployment Assistance, PUA.
Yeah, that's next month.
That's set to expire next month, September 6th, I think. But a lot of states already have been cutting people off.
Right. And then I'm hearing about people still, the states that have got, so the jobs numbers, came out or whatever. So some people were satisfied, some people were not. But I'm hearing about even in the states where they cut the unemployment earlier, the job numbers still aren't doing really great in those states. So, is it true that people are choosing not to work, or is it their calculation of how they measure who actually is working or not? Which is the fault.
I actually read about that, and they've spoken to real people on the ground about that. And there's a woman there in that article. She used to have her own real estate consultancy company, but with the crisis, her business just collapsed. And she's got health problems. And I know we question a lot about what's going on health-wise, but some people are scared. And she's on her own with 2 kids, teenagers, and a lot of the jobs now are going back to working with other people, and they've scared people so much that she's scared of going. She says it's not worth going to work for $8 an hour. And she said, I don't want the
participation. She don't want to participate.
She doesn't want the pandemic help. She just wants to start her business again. And I think that's why, yes, there are some people maybe who rather just get the pandemic support and not go to work. But I think it's not as, I'm not trying to excuse people who are not working, but there's a lot more to it, I think. And unfortunately, the government is to blame for it. Here as well in the UK, a lot of people are scared of going to work with big groups of people. They've scared people with this hype-demic.
Yeah.
They've really, and now, for example, even if the government here or in the US said, "Oh, it's all over now, let's go back to pre-2020,"
Yeah.
we wouldn't, because people have been so
Conditioned.
terrorized,
Yeah.
conditioned.
And speaking of which, the event that I'm referring to that I keep forgetting, which I think is going to be the biggest domino, is that private companies starting in late September, early October are going to start mandating some things. And so it's a lot of buzz, especially in Michigan, the healthcare, automotive. So around this entire country, private companies will be eventually forcing their employees to participate or not, and then the consequences of that, whether you do or you don't. And I was actually having a discussion earlier as to how people are so conscious of the life, and this is only natural because you've worked so hard to accumulate and to build up a certain level of life and comforts and everything else, not realizing that if people really knew what was going on, that this is a global event that's occurring to 7+ billion people. Everybody right now is going to be forced to make some changes in their life, either voluntarily or they're going to force it upon you. And if they're going to use employment as the leading driver force before fall, before winter, before the flu season officially kicks in, to make people participate. And if you don't, then your lifestyle will be adjusted more than likely. And it's going to be a very problematic event, because if people choose to opt out, that means they may end up selling their homes. So we're going to have a flood of houses on the market. Less shopping now because people won't feel as comfortable if they are no longer in the market earning the way they used to. So it's going to be a blow to the economy. And they want that, you know what I'm saying? Because that helps their narrative of, we need more support. We need more help for the people. People are hurting. And we got a new, the unemployment numbers skyrocket. I mean, so it sets up the narrative for the need for another package of some kind before the end of the year, I think. So, man, it goes on and on and on. But here's that act I was talking about. It says new support act legislation could turn into guaranteed income of $1,200 a month for taxpayers. So the threshold is if you're a double filer for family, up to $220,000, every adult will get $1,200. And Omar is saying that this will help push people out of the poverty threshold. And I'm thinking, like, won't it make everything around us just go up in price as well, to where?
So this is for families earning up to $220,000 a year.
A year. Let me see. Wow. I'll give you some details. So $75,000 for single family and $150 for taxpayers filed jointly. So this is a different article, but
so $150,000. I mean, that's a lot. Why would someone a family that's on $150,000 need $1,200 from the government? Like you said, it's just going to push up consumption. It's going to push up prices.
Yeah.
And,
600 for kids too. I forgot to add that one. 600 for kids. So a family of four can walk away with a nice little chunk of change. But is it, what about the purchasing power? What, like, it doesn't. And so I follow the Universal Basic Income Twitter feed, and that's one of the California mayors. And they just passed something out in San Diego or Sacramento, California, $500 a month for, it's something like every it's like distressed child, or sometimes it's some lame excuse, but they're giving $500 for every person, and it's touted as helping out, giving people a chance to make it up and make it in life. And I'm thinking, like, California is already extremely expensive. Like, what's $500 going to do for you, really, like that?
I think it's a backdoor to UBI, and I think they'll probably be trying that here as well, in other places in Europe. Even though I would say, Europe and here are much more far ahead in terms of socialism than the US. I guess the US is catching up. All this is going to do is going to make, unfortunately, people more and more dependent on the state. And people forget, where is this $1,200 coming from? Well, it's coming, if it's not going to be paid with taxes, it's going to be paid through inflation. So the people that are supposed to help is going to hurt them even more.
Right. Very true. Here's a question for you about, it says, question for you, Mario. 2 days ago, you said no deflation due to printer, then hyperdeflation, and then stagnation with trash notes. Question, where you meant to say hyperinflation? Only way it makes sense to me.
Hyperdeflation, maybe I meant hyperstagflation. Maybe that's what I meant. So you have runaway inflation, currency collapsing, and the economy not doing well. And usually hyperinflation is always during depression, economic depression. The Keynesians think that hyperinflation is a cost push thing, that it's the economy overheating, but it's not. It's when the economy is down in the pits, and people lose confidence in the currency. So I maybe I got confused. So yeah, it's hyper deflation, stagnation.
Stagnation, yeah. Hyper stagnation. So here's another thought as well. So feel free to ask questions or whatnot. We just want to make sure we include everybody. And so this is something David again says, curious if you're aware of the Jubilee of Shemitah this September. The Shemitah from historical events usually follows a major crash that ties into financial events. So that's I'm familiar with it, but I never follow along with it. I know.
I even bought I bought is it Jonathan Kahn? I bought the Shemitah book back in 2015, and not much happened there. I think he was calling from. So now some people are saying that 7 years later we're gonna get the real thing. So I don't know about the Shemitah.
I think a lot of people, and the reason it came across my radar was listening to Bo Pony, because he's the whatever he's labeled himself as. He mentions Shemitah, but I remember hearing about that 3 or 4 years ago from him. And every September, October, there's usually some type of event due to just how it always, the cycles have always gone. So we can blame it on Shemitah or what, I don't know, but they have scheduled a great reset. So they're gonna do a jubilee for themselves, but it won't benefit the people at the end of the day.
Yeah, it's gonna be a great transfer of wealth from. I think it could even hurt the very wealthy, but it will benefit like the 0.1%. I think Bo Pony calls himself an analyst of time. Cycles. Yeah. But I remember though. Do you remember Christine Lagarde? She was the managing director of the IMF at the time, and now she's the president of the ECB.
That was a smooth transition.
Yeah, she made a speech, especially for a convicted criminal. She made a speech in 2014, I think at the Press Club in Washington, D.C., and she talked about the number 7 and the reset. And so you add 2014 to 7, you get 2021. A lot of people at the time were thinking, oh, something's going to happen in July of 2014 because it's the 7th month. But some people actually think she was talking about 2021. And she knew way back then. And it's possible because they've been planning things for centuries, these kinds of people.
Yeah. Here's a video here about her talking about sevens and numerology. You guys don't understand the importance of 7. I was like, what the hell? Like she's what is she talking about?
This was not 2019. This was 2014. That video is, but
Sua says
January
National Press Club luncheon, January 15, 2014. So, but it was like, what is she talking about? But obviously, and so this goes into, just as I've mentioned, I've been going a little bit farther left field with my studying these days. And I always refer people to a video done by Dr. David E. Martin, which can be viewed on Rumble, and how he goes through all the U.S. patents of things that have been filed over the last 20 years leading up to this current event we're experiencing now. And so after Googling some of those patent numbers and seeing when they first filed patents for this vaccine, that vaccine, I'm like, they've been building up for this for quite some time. So of course this was never, this was a part of the plan. And so, and my question has always been, did they want it in 2020? Was Trump a deciding factor to speed this up? Because I also hear people say that it was planned for 2030, 2040 down the line, but they were disrupted. So I don't know, whatever, but it's here now. So let it be. It is whatever it is, but we will see. I saw somebody, here's a question. It says, how long do you guys figure they can keep the metals down? What are your thoughts on that, Mr. Mario?
They can keep it longer than we would like.
Yeah.
And I did a video earlier this week on my channel, and I looked at the precious metals bull market in the 70s, which
Yeah.
was a huge bull market when we had stagflation. And gold from 1968 to 1975 went from $35 to $200.
Yeah.
And then it corrected down to 100 by 1976. And then it was only in 1978 that we broke back above 200. And then 2 years later, it went up to almost 900.
Yeah.
And the same thing with silver. We got up to $6.50 in 74. And it was only in 79 that we broke through 6.5. And then a year later, we were at 50. Am I saying it's going to take that much longer for metals to go up? No, but it just goes to show that markets don't do what we want them to do all the time, what we think they should do. So that chart is a little bit difficult to see. If you bring it in here, you can see in the.
So here's the 70s.
Yeah, you see, it took it was only towards the end of the bull market that we really went up. You see from the mid 70s to here, it flatlined. I think what we're that period from 75 to 78, 79 is the equivalent of 2011 to around now. Yeah. Now it's a little longer. It's 10 years because the bull market actually started in the beginning of the century. And I think it's going to be an even bigger bull market in terms of time frame and price move, because we've never seen the world be inflated. The central banks inflate currencies as much as they have been doing for the last 20 years.
Yeah. Yeah. What I find to be interesting is how gold and silver tend to have, they follow each other relatively closely, on this chart here. And then literally after that last, bull run in 2011, things really started diverging. And I remember this was kind of when I started really waking up to everything, start talking about this, and it hasn't really, came close together just yet. And then to see how important silver has become and how much of a threat. It's like the central bankers' kryptonite. Like they don't want silver to do nothing.
Well, the thing is, silver is going to catch up and even outperform gold eventually, just like it did in, from 78 to 80.
Yeah. Yeah. So with that being the case, and I see, especially on the live streams on my side, a lot of people are discouraged, like, man, silver, man, like, and people feeling like they're missing out because the crypto is taking off and they like, man, I should have jumped in that, man. At least I have that,
You shouldn't be. I personally, it's very hard. It's very tempting. But I always go back to the fundamentals, to what I've learned about money and what's happened in the past. And I can't see it any other way. I'm just going to be patient. I'm not like you need to learn how to not just be a fair weather sailor. You have to go through the rough patches. And this is what it is right now. But probably the best time to buy right now, because
I would agree.
Sentiment is so bad. If you have spare fiat currency, and even then, the premiums are still pretty high. So
and that, man. So Mario, on Wednesday, I went to my little dealer here, and got some Eagles, and it was $38.50 to get one Eagle out the door because he's having issues, supply issues, whatever. And then I went online, they're 36, 35 or whatever. So, but the spot price was 25. So no matter what, for a silver Eagle, it's about $10 plus. And I'm like, it was a privilege and an honor to give him $40 almost for one piece of silver that I know I'm more than confident that one piece of silver next year or the year after that, I'll definitely be able to get my $40 back plus some if I wanted to. But I'm not going back into something that's dying. I'm holding on to something towards the future. But anyway,
the other thing people need to understand is that gold and silver are savings, and very few people save. But you're not going to hear of someone who has a lot of gold and silver and has been, you're not going to hear that they're poor. So you're not going to go poor. You're going to be comfortable if you're able to save in gold and silver. You're not going to, and you're not speculating really because they're real money. You might have put it in Robinhood IPO or whatever, all the other stuff.
Yeah.
but I try to stick to what I know.
Yeah. Now let's look at this price, man. So I'm not sure what happened, but clearly some
That
contracts were
was the
dumped.
non-farm. That was the non-farm payroll number that came out,
So just
and it
whoop,
was
right
a
on
little
down.
better than expected. Yeah, and they just smashed it.
So think
Uh,
about
it
it. So you cannot, like, nowhere in this country, nowhere in the world can you go and buy an ounce of silver for 24.34. You know what I'm saying? Like, the premiums, I think, is the difference maker, like, moving forward, whether they high or low. To me, it doesn't matter
yeah,
because of what's really going on. So,
yeah,
when people say, wait and buy the dip, what dip? You buying the paper stuff, the electronic stuff? What you
yeah,
buying? Because there could be no dip.
yeah, yeah. This is like the situation that goes on in countries like Venezuela or Brazil or Turkey. They have a bank price for their currency, like for
Mhm.
tourists.
Yeah.
Let's say you go to Brazil, and the official rate $1 is 5.5 reais.
Yeah.
But if you take dollars cash and you go to what they call the black market, you're
Hmm.
probably going to get $6.5. So
Hmm.
it's getting more and more like that. That price doesn't reflect reality, and it's
Right.
not going to last forever.
Right.
Yeah, the correction is taking quite a long time. But don't forget, last year gold and silver dropped to 11 and change in March. Before that, it was around 18,
Hmm.
16, 18. Now
Yeah.
we're, despite what they did yesterday, we're around 25 still.
Yeah.
Gold corrected. Well, prior to 2019, it was ranging between 1,000 and 1,300
Yeah.
from 20 for the last 6, 7 years. And last year, we got down to 14, 15. So yes, it's frustrating, but people need to be patient, I think.
Yeah. So here's a little chart showing since 2016. So, and I've watched, of course, I'm fascinated with Venezuela. I'm actually interviewing somebody who's from Venezuela who's there now. We're going to talk about because they're coming out with a CBDC in October, and the currency, they got to chop some more zeros off. So talking about that, but here's just, here's the price over the last umpteen years. So it was mighty challenging because this was when cryptocurrency was booming. So people were dumping
Yeah,
silver to get into Bitcoin and stuff like that. We had the major rally and it was flat 1641, 1516 was the average. So having got in then and to have it in your hands now, you've done fairly well. Like, your dollars have been
yeah,
destroyed. Fed's balance sheet is what went from 3.4, 4.2 now to 8 something, and
yeah.
and climbing, and monetary base is through the roof. So if you've held on to 1 ounce, you've done fairly well thinking long term. But I can see how it can be discouraging if you're looking at crypto where, it changes, a couple thousand every hour, it seems like.
The thing is, Mike, as well, a lot of people probably they chase the market. So last year,
Mhm.
when gold was above 2,000 and silver was approaching 30, they were all
Mhm.
buying.
Yeah.
Uh, but now that they should be buying, they're not. They're
Yeah.
selling what they. Uh, I know it's difficult to tell when to if it's a top or a bottom, but
Yeah.
I would say right now it's probably not a
Yeah.
bad time. You might be able to get it a bit cheaper, but the upside potential is great, I think.
Yeah. Chris says, if gold went to 25K next month, would you be able to sell it easily as you could today at current levels?
I'll answer that quickly.
Yeah, go ahead.
Gold is the most marketable commodity. It's money.
Yeah.
You will have no problem going to a dealer and selling it.
Yeah.
Yeah.
And
So
I think, if it was to shoot up and to reach that type of figure there, it's more than likely a response to the environment. And will you want to go sell
I
it? I mean, of
know.
course, dire situations you might need to, but because
Yeah.
that's probably literally just the beginning, because everything around us is we're in,
Oh yeah.
we're in the Mad Max type of environment, I would
Yeah.
assume, because
I mean, yeah, and that would mean that the month after that would be at 50 or 100,000. So you wouldn't want to get rid of it.
and then also, and there's another thing. So we'll find out as far as the business side of operating, online bullion stores and the local coin shops, because it's $25,000. But what type of environment as far as what that currency can buy? So it's like in Weimar Republic, you had an ounce of gold. There was, one Reich was, 20 rikes for 1 ounce. And then at the peak of it, it was, 1 point some, million trillion marks. Like, well, would you have gone and got a stash of paper? More than like you're taking that, and probably I've read one of the books about the Weimar Republic. They took that coin and actually gave it to somebody who owned a building, and they took that coin with like appreciation because they didn't want no paper. So I think if it's 25,000, you're gonna go buy something directly with that.
I think, Chris, if gold is at 25,000 next month, there's a problem in the world. And people would probably rather take gold than paper. So you'd be able to get your ounce of gold and buy a fleet of Teslas or something and start a taxi company.
Yeah. So let me so real quick, we'll get ready to dial back a little bit, but I want to find out. So we got about 180 people checking in. Hit the thumbs up button, show your support. And then also I want to find out, was there a verdict from this cryptocurrency amendment that they were talking about or whatever? Anybody out there been keeping an eye on that? I'm curious to hear what has happened or what has not happened. And because a lot of people are banking on the cryptocurrency being favorable in this country, if not, they're thinking everybody's gonna get up and leave. So let me see, is there any vote yet? I don't see nothing as of now.
No news yet.
No news yet. But then
crypto amendment vote, and I'm getting the closest is like 12 hours ago, 19 hours. So nothing's out yet. Yeah.
So watch this. I'm gonna share a tweet with you. Last night, as I was trying to just brush up on what was going on, I came across Brian Armstrong, the Coinbase CEO. And he was talking about today, he was saying that, there are a few key moments that define our future. One is happening right now in the Senate. So I'm thinking like, define our future. I'm like, really? So I'm like, if computer code defines your financial future, then you are already in trouble. Computer code can never outweigh chemical elements. The very essence of life depends on it. Share your thoughts. So
I agree. Yeah.
I'm like, whose future? Because you just went public, so you're doing well. You're fine. Now you talk about your business model might be in trouble, but your financial future is good, buddy. I'm sure. Oh my goodness. All right, well, let me see. I don't see any more thoughts out here. Can you? Okay, it says here's something about Glint. Can you use Glint instead of a bank? David, Mario, what's happening with Glint?
Glint, yes. I'm not sure. Yeah, Glint is like a prepaid card. So you can use the MasterCard to spend, but I don't think they are like a bank yet. They're not a bank, so you wouldn't be able to have direct debits and things like that to set up. But yes, you can have dollars, Federal Reserve notes in your Glint app. You can have gold. And then with your MasterCard, you can pay for anything. You can lock your card to gold or dollars and spend it. But it's not a bank, because a bank would lend the money. Glint doesn't. Glint is just like I would say is a depository. But it allows you to spend the gold. And the fiat that you have with them, they keep it. In the US, they keep it with I forgot what bank it is, but it's in your name with that bank. And in the UK and Europe, it's with another bank.
So as you're talking, so in the chat, low blood pressure said he'll take the jab for a monster box. And so people are saying, like, somebody said, I'll take, what it says, Riley said, he said, I'll take all 3 jabs for 3 boxes. And I'm thinking, like, I know they're joking because, and so here's something I mentioned earlier.
Well, I hear they're trying to convince the young people that they'll get a 10% discount at Starbucks for getting a vaccine. I think they need to do better than that, don't they?
And this is a defining moment in history, I think, because as I was alluding to earlier with the mandates on the job, it's going to be a matter of if you are aware and awake as to what's possibly coming in the future, you're literally like, is your paycheck and your livelihood being at risk worth jeopardizing your long-term health? Because I'm more than confident, based upon all the stuff I've seen from other experts, that there is no long-term future for people who fully participate because of the unknowns of the human body. And even all the CDC, all them people are changing their tune now. You went from going back to normal if you participated to now even though if you participate, you still can transmit it, and you got to wear a mask. So like, what has changed for you if you fully participated? You know what I'm saying? Nothing. So imagine what else they're not telling you as well will be my thing. But I can go on and on, man. But let's get this last little chat here, and then we'll dial back. Mike and Mario, do you think gold could go down to $1,200 in the next year? Joshua.
I'll give you my opinion, Joshua.
Yeah, what you think, Mark?
It's possible, and especially if the stock market crashed by 50%. If that, you could see gold go down, but it probably will go down less than the stock market. Last year, we saw the stock market drop almost 40% in a matter of weeks, and gold dropped from 1750 to 1450. But the way central banks and governments are acting with stimulus, I find it hard to see gold at 1,200, even though anything's possible. Would I get rid of my gold at 1,200? No. I'm going to keep, unless I need to exchange it, unless I need it for a rainy day, of course, because it's savings and money. I think we get too bogged down in the price. Yeah. And like you say, Mike, you have to think about the weight that you have. Yeah.
Measuring your financial future in weight or acreage or calories, things that actually are, because, and I mentioned the treasury.gov referred to the fact that Federal Reserve notes are not redeemable for anything. They're only good for the actual goods and services in the economy. So literally, like, it's just being able to get whatever you need when you need it. It's good to say in time you're going to get less using Federal Reserve notes. But if you use silver dollars or gold eagles or anything like that, you'll be fine, or any type of other metal. So
and the Federal Reserve note and the fiat currency, it's like a Ponzi scheme, because you can't liquidate the debt. You can liquidate between you and I can pay you with a dollar bill, but you can't go to the Federal Reserve or the Treasury and get payment for it, and they'll just give you a new one. So it's like a musical chair. And when people realize that's what it is, it will all implode. And I think that's what they're fighting right now. And that's why they're having to stimulate, because the debt is losing more and more of its utility. There's so much more debt. And the only way to keep it going is to keep rates low. It's a mess. So,
I agree. And so to piggyback on our $1,200 gold price, I'd imagine anything is possible, but yet will you be able to source it for $1,200? Because the premiums, I think, will make up the difference. So, listen to all the bullion dealers out there talking how tight things are now. If it's really tight now, you think it's going to get 10 times tighter when it's a cheaper price. But then again, they gotta make their funds, because they're buying it right now at 17, 18. So they're not going to lose $400 or $500 giving it to you.
The premium will probably be 30 to 50%. I would
easily
actually speculate. We'd be paying 1,800, 2,000 for real gold. That 1,200 would be the COMEX or LBMA unallocated price.
Yeah. 1 troy ounce is 1 day's food. At some point down the line, that's pretty much what it would be. So right now, silver eagle, $35.
Silver, because gold, you can get a couple of months' food.
Japanification possible is last question here. Is Japanification possible here?
Yes, I think so. But even in Japan, the price of gold has gone from like 50, 60,000 yen. Now it's 200,000 almost. Japanification is like more and more QE, more and more government spending, more and more debt. It's possible.
It's a real world. It's real world MMT. Modern monetary theory in that region, which is what is being done here. So it's kind of.
And I remember in the early '90s, mid '90s, when I worked in the city, Japan was already going down this route of government intervention, and all the economists in the West said, "You're doing the wrong thing. You need to let the market." But now take its course. But now we're doing what Japan did. We're interfering. So yes, there is a danger of Japan is Japanification.
Yeah, it's a mouthful. Well, Mario, man, it's always great to connect, man. We're about 50 minutes or so, as always. Man, it's good to connect with you and hear from you, hear your thoughts on stuff, man. So, Manico64 on YouTube, check them out if you haven't already, and definitely let's get back at it, man. So, this upcoming week will be very interesting because we'll see how events around us unfold. It's all going to be driven by the health narrative. That's going to control everything from this point forward, but we'll do the best we can underneath the surface and enjoy the rest of your summer, my friend. So everybody,
Thanks.
Be blessed, be safe, and we will see you guys next week. Peace.